Hello, YouTube. Today we're going to be talking about how this is fine. We are making history. And yes, I'm talking about recession. So there's a key gauge which tells us whether or not a recession is on the horizon. And that is the inversion between the 2 and 10-year Treasury note. What we're looking at specifically is a number here at roughly 109. We looked at this chart a little bit earlier, but the reason why this one is so important is because we have now made a new all-time high on the 2 and 10s, which means we are higher than we were in 2000. We are higher than we were in 2007. We are higher than we were in 2019. And this is a new all-time high. We also have a golden cross on the chart here, which means that the short-term price is going higher than the long-term price. It's pretty obvious to tell that when we go from basically 0 up here to 1, that we are going up. So that is what we want to talk about today because we just got the GDP print out and it looks like it is a recession. So we look here and note that, let's actually filter this back down to 2 stars because we only care about the data that really moves the market. Let's do that. Apply. I don't know why it was there. All right, presto magic. There we go. Numbers for today include that we have GDP coming in at negative 0.9. Last time it came in at 0.5. So the reason why this matters is because the previous reading was for negative 1.6, which means that we did miss the forecast by quite a bit. We did actually also have a less shallow dip than the previous time, which means that GDP contracted more in Q1 than it did in Q2. And the reason why that is important is because it just means that, again, potentially we've seen peak inflation or peak hawkishness from the Fed, and also that this could be what a soft landing looks like. If you're having a hard time understanding what happened to the tape today, well, we could jump forward here to GDP Now, which is from, again, this is from the St. Louis Fed, and it was showing us a negative reading of roughly negative 1.5. Now it's a negative 1.2, but this is what people in the know or smart money is looking at. So when the number came in at negative 0.9, yeah, it's a dramatic miss. It's really bad compared to the previous number. However, it is less bad than the previous report. And the reason why the market took a notable leg up today because we made new highs, right? We made a fresh new high today. And I think the reason why is because the market is able to bottom once it knows what type of recession we are in. And now it knows it is shallow. It is not really a very big deal. And it's looking a lot like 2016 or 2011. So we talked about before on how we have the Fed put. And again, to make it very, very, very simple, we're going to go back in time to the 2 periods which are very similar to now. So we got 2011 and we got 2016. What happens? Well, we fall below the blue line. The blue line is the 50 moving average, or the blue number here. You can note as I hover over. And the black line is going to be the 200 MA. So what do? We go, we lose the 50, test the 200, reclaim the 50, go up. All right, what happened in 2016? Lose the 50, test the 200, not quite hit it, get back above the 50 MA, there's your expansion. What did we just finish doing? Again, it's roughly the same thing as 2018 as well. So now we look at where we are now. Oh my God, what happened? Well, we lost the 50, almost tested the 200, now we're curling back up. What do we need to do to confirm that we're actually going to be going up more? We have to get back above the blue line and then expand. Is that the base case? I don't know. I still think there's a lot of work left to do, but the reason why I believe the market went higher on a red number, which means a miss, and jobless claims, which basically came in line, is because this is the question we have to ask ourselves. If it acts like a recession, contracts like a recession, is it a recession? Well, it depends whether or not you're in government, because the U.S. is now telling us that, again, technically it's not a recession. They changed the definition not that long ago. And we look here again. Let's look at an article from the Wall Street Journal. So again, a recession by any other name. An economic downturn is a political problem. So the White House is playing semantics by redefining the term. That's awfully convenient. Yep, it's awfully convenient. And this is very similar to what the Fed does by using the core PCE when they damn well know that CPI is what people really feel at the pump. People do actually have to use energy to heat their homes up and to drive to work. And they also have to eat. Those are nice. Those are must-haves, not nice-to-haves. The other reason why I think that the market also largely priced this in is because recession is consensus, just like it was in 2008, just like it was in 2020. Here we are, right? Everyone thinks there's going to be a recession. So again, it was not that deep. It's not all that bad yet. if the data is going to come in better. And after yesterday, it means that the people who were bearish, they don't want to believe this is real, right? They're fighting with the chart. They're like, we're at 400. That's definitely going to be a new short, 401 short, 402 short, 403 short, whatever. At a certain point, like I mentioned yesterday, you need to know at what level on the chart your thesis is incorrect. And if you don't know what the number is, I would highly encourage you to do some homework overnight. So let's have a look at a few more things here. So again, we're trying to just understand what happened here. We'll look at a couple of charts, then we'll wrap it up, because we are going to be back tomorrow for an exciting end-of-day live stream with Drew, who is our teenager superstar. I believe he's only 14 years old, and this kid is bright. He is sharp, and I think everyone can learn a little bit from him. I'm also curious on his personal take. So what happened? Well, we continued to climb the wall of worry, and I'm recording the video before we have the Apple earnings in, but we do have Amazon, and I will touch on that in a moment here. But again, what did we get through? Well, another fresh week, more worries. I mentioned on the weekend that this was going to be the most important data jam-packed week ever. So far this year, not ever. So far this year. And that's a lot because last week was most important. Now this week is the most important. What happened? We got through all this, and we're sitting about right here, right? We're sitting at about Thursday, end of day. We've got Amazon out, and we're waiting on Apple tomorrow, but we got 3 more data points left. You're going to note that 2 more are bolded, underlined, and red. That's because they're important. So everything tells me so far that we are climbing the wall of worry. We got a few more data points left, and an easy way to try to think about that is that the market was in extreme fear for a very long time. We ratcheted up to fear about a week ago, ticked back down, and now we are building up steam to maybe get into neutral where people might believe the rally. And then we get into greed where people are going to feel that pain if they're short, and the bulls are going to want to continue to add on more risk. That is how a dead cat bounce or a relief rally can turn into more. As a reminder, how much are we off the lows now? So from the low of the year to where we are now, we're roughly up 12%. What is that? That's 60% of the way to a bull market. So yes, we are past the 50-yard line. If we have the red team versus the green team, and this is the 50-yard line, the bulls pushed it all the way to the 50 yesterday and then notched it into, again, positive territory today, which means they're in control in the short term. Doesn't mean they have long-term control, but as of right now, the momentum is definitely to the upside. Another thing to look at here, again, they're changing the title based on what they wanted to do. Amazon is up in after hours. Last time I checked, it was up about 11%. Let's have a look at it now. Now it's up 11%. So why is Amazon up 11%? Why? They actually lost money again. This is very similar to Microsoft and Google. So Amazon reported second quarter results after the bell on Thursday. What's the headline here? Jumps after second quarter revenue tops estimates. So again, they lost 20 cents. Stock is worth $100. That's not great, right? They're losing money this quarter, but they had a $4 billion potential write-off they were looking at, and they also had a foreign exchange hit, similar to Google and Microsoft, which means that they're beating the estimate, but there's still not going to be a huge amount of positive upside. What happened here? Not so bad. Ends up being really good. That was the same thing with Google and with Microsoft. So when we look here again, it's way down in the dumps. Came down to strong support or bounced off its 2018 top, like we talked about before. It's reclaimed 2 key pivots, and now it's up a lot. It's up a lot. So we're going to see what it's going to do tomorrow. There's going to be a huge hole on the chart or a gap. Right now, it's a huge gap of roughly, about $13, $14. But this tells me that negative news or a recession does not really move us lower. And good news moves us up dramatically. So when we look at the tape today and we go over here to SPY, what happened? Well, we got another hammer. So we backtested today to a low of 398, which happens to be a very important area. So we backtest roughly the midpoint between our gap. Again, that's the gap that we have right here. It's the gap where the yellow box is. But there was something more important that happened today. And again, the volume is still elevated, it's still bullish. We're still pointing up. We're still closing higher, which means momentum is building up. And the more that people want to fight this, the more it can squeeze higher. So what was really important today was QQQ. And what I would note here is this relative high going back to August of 2020. So we bounced off roughly the 200 MA. We now have reclaimed that area. The low today is pretty much the high from this area here at 303. Let's zoom in and find out what that looks like. We bounced off a red line. Red means resistance. So we pushed down to 302.75, formed a hammer, and then punched up. So what does that mean? we hit a previous area of resistance. If resistance is still resistance, we should reject there. If resistance is turning into support, we should bounce there. And again, it looks like we're carving out a bottom. Why? It's carving out. It's carving out. Is it confirmed? Is it going to go lower? Is it going to go higher? I don't know. All I'm doing is collecting the evidence to show you what I'm seeing on the tape. And right now, what I see forming is a cup and handle. Where what? The 50 MA curls down. We can blow over it, back test it in advance. Did we already do that though, Justin? Yeah, we did. Remember the QQQ 50 DMA backtest, just like on SPY? Get over it, backtest it, advance. Oh my God, is that really what's happening? Yep. Let's look at one more chart to continue the story here. And this is going to be the ES or the E mini futures. So I was leaning on this chart yesterday in terms of understanding what should happen today. And what we can notice is that, again, we have our inverse head and shoulders, which is what? A bullish reversal pattern. What happens? Massive volume comes in. It confirms the move. Where? Right at the 50 MA, right at the VWAP, which means we're now above our long-term price or the 200 MA, our short-term price, which is the 50 MA, and our profit and loss, which is the VWAP. Then what happens, right? We blow through the resistance, get to the next top, which I mentioned yesterday, right? We digest it. There's your bear trap. Oh my God, finally some relief. I'm bearish. I need for it to go down. Nope. Right? Another rocket ship up. And what's going to happen? Well, what I expect to happen is this previous top right here is going to align with roughly the VWAP and the uptrend. So I think that at some point we will come back down and test this uptrend. Is that going to be tomorrow at the open? Is that going to be as the 50 MA curls even higher and we test the next high? I don't really know. All I know is that it is becoming easier for us to go up than it is to go down. I'm not saying we can only go up. I'm not saying we're out of the woods yet, but the evidence is building up, and I encourage you to be receptive to it because there is still a lot of time. The 60-yard line means that we're only roughly halfway to where we need to go. And I still think that we could go as high as 454 based on previous research, which would give us that retest of our our weekly head and shoulders here. Again, we have our shoulder, we have our head, there's our shoulder. We could retest this area one more time before ultimately going down. So if you want to tune in tomorrow, we're happy to walk you through the close. Again, my name is Justin. That's me right there. I'm going to be hosting the stream with Drew, the 14-year-old superstar, tomorrow. Highly encourage you to tune in. It's scheduled for 3 p.m. Eastern time tomorrow. And if not, we have the weekend video, which tells you why and where the next bull market is, right? The new bull market is here. So, stock market decides. Encourage you to watch that. If not, thank you very much. Look forward to seeing you tomorrow. Thanks.